Hello, everyone. Welcome to the Newsbrowse News broadcast. According to Xinhuanet, JPMorgan Chase Chairman and CEO Jamie Dimon has issued a warning regarding the substantial risks facing the U.S. economy due to the ongoing war with Iran. In his annual letter to shareholders on Monday, Dimon highlighted concerns over potential significant and sustained oil and commodity price shocks, which could lead to a reshaping of global supply chains. He also cautioned that these factors might result in stickier inflation and ultimately higher interest rates than current market expectations. Dimon further identified other challenges, including high global sovereign deficits and debt, elevated asset prices with low credit spreads, and trade tensions. He noted that the U.S. economy has been largely boosted by government deficit spending and past stimulus measures. CNA reports that Singapore's semiconductor manufacturing and healthcare sectors have not yet been directly impacted by the global helium shortage, which stems partly from the Middle East conflict affecting key supplier Qatar. While the Ministry of Health maintains secure supplies through diversified sourcing, and chipmakers like Micron and UMC report normal operations with robust supply chain strategies, experts warn that a prolonged disruption could lead to significant cost increases. Helium is crucial for advanced chip production, MRI machines, and laboratory testing. Although alternative sources exist, Qatar's substantial contribution to global supply makes instant replacement challenging. The current risk is primarily the costs, not immediate operations, but consumers may eventually see higher prices for electronics, cars, and AI-related products if the shortage persists. Mitigation efforts include prioritizing use and helium recycling. US stock market saw tentative gains on Monday, as investors awaited a deadline set by President Donald Trump to potentially bomb Iranian power plants. The S&P 500 rose 0.4%. The Dow Jones Industrial Average added 0.4%, and the Nasdaq Composite climbed, strengthening a body of. Crude oil prices seesawed throughout the day amid ongoing uncertainty surrounding the conflict with Iran and its potential impact on global oil flows. Trump reiterated his threat to attack Iran's infrastructure if it does not open the Strait of Hormuz. Despite the geopolitical tensions, a recent U.S. jobs report indicated stronger than expected hiring and an improved unemployment rate. However, rising gasoline prices nearing 4.12 per gallon and accelerating service sector prices pose potential concerns. This report. On Monday, stock markets in both Canada and the U.S. closed in positive territory, recovering from a day of uncertain trading. The upward movement was attributed to a mild risk-on tone among investors and a slight increase in oil prices. Kevin Burkett, a portfolio manager at Victoria-based Burkett Asset Management, noted that hesitation in early trading stemmed from the looming deadline set by U.S. President Donald Trump, who has threatened military action against Iranian power plants if the Strait of Hormuz is not opened. Iran, however, rejected a ceasefire proposal, demanding a permanent end to the conflict. Investors remain confused by Trump's contradictory statements, leading to diverse opinions on whether the situation will resolve quickly or escalate into a prolonged conflict. Despite this uncertainty, energy markets appear to be factoring in a swift resolution to the conflict and a return to normal oil flows. Bank stocks performed strongly, with JPMorgan Chase rising to 8%, reflecting CEO Jamie Dimon's view of a resilient U.S. economy, albeit with warnings about high asset prices. the Canadian market saw gains in its industrials and consumer cyclical sectors. As investors sought to avoid missing out on a potential rapid recovery, the Canadian dollar saw a marginal increase, trading at 71.86 cents US, and the June gold contract rose by $5 the high stall 4,684 because that's 7% ninald andis persembera. A new report from digital real estate platform and brokerage Wahi featured on CTV News indicates a significant shift in the Greater Toronto Area housing market. In March, nearly 75% of GTA neighborhoods saw homes sell below their asking price, making it the weakest month for homebuyer competition in at least 4 years. Since Wahi began tracking this data in July 2022, only 6% of the 213 analyzed neighborhoods were in overbidding territory, a drop from 7% in February. Conversely, 92% were underbid, with just 2% selling at asking price. This trend suggests increased negotiating power for prospective buyers. The report attributes this faltering competition to factors like economic uncertainty, emerging geopolitical conflicts, unseasonably cold weather, and ongoing affordability challenges. Detached, single-family homes showed slightly more overbidding activity, 14% compared to condos, 1%. Overall, only 23% of homes sold above asking, down from 31% last year, while 74% sold under asking. That's all for this video. Thank you for watching. See you in the next video.